I'm Sarah Williamson, and this is Going Long with FCLT Global. On this show, you'll learn what it means to be long-term from the top minds in global business and investing. Leaders from companies and investment organizations join us to discuss how they are leading their teams for the long run on issues including capital allocation, risk management, climate change, and sustainability. To learn more, visit our website at fcltglobal.org. Today, our guest is Ronald Wuijster. He's a member of the executive board of APG Group, which is responsible for asset management. He's also chairman of the board at APG Asset Management. So welcome, Ronald. Thank you for spending time with us today.
Thank you, Sarah. Thank you.
So let's start with the Dutch pension model. Once again, the Dutch pension model received Mercer's rating as the best pension system in the world based on adequacy, integrity, and sustainability. Can you explain for us why the Dutch model consistently ranks so highly relative to other plans in the world?
Yeah, of course, we're glad that a model that gets criticized so often inside the Netherlands always gets praised outside of the Netherlands. So we often say, if you want to get compliments for our system, you should cross the border. And already in Germany or Belgium, people start to applaud, but not often in the Netherlands itself. But I think the reason it ranks high, a very important factor, the most important factor is what you would call the replacement ratio. So the amount of income you will still get after retirement. And that's very high compared to other countries. It's aimed for 80% of average salaries. Some systems still aim for 70% of final salaries. So I think it's more usual these days, 80% of average salary during your career. And that's a very high, that leads to a very high replacement ratio. A second point, you mentioned that as well, is the Netherlands, and particularly pension funds in the Netherlands, are long-term investors, like the goals of FCLT. So I think that suits as well, but also pay a lot of attention to sustainability. And I think have done so since a long time. And I think that also makes our system rank high with sustainability factors, and related to that, the transparency of the system is continuously increasing. So it's becoming more and more, I think, an open communication system for the participants in the system, the consumer, the participants of the pension funds. And I think that also helps us in getting the high ranking. I think, well, sometime there was a year where Denmark, I think, surpassed us, but now we're firmly back on the number one position. And I hope that will stay that way. It will stay that way.
That's great. And can you describe a little bit about how APG fits into the Dutch pension system, and who your members are, and how the APG Asset Management works with those members?
Mm-hmm. Well, I think for the listeners, it's good to understand that APG is a bit of a hybrid between an asset owner and an asset manager. So our clients are large pension funds in the Netherlands, the government pension fund, ABP, the building and construction pension fund, BOU, ABF BOU. BOU in Dutch means construction sector. And housing corporations, so big pension funds that in reality are the asset owners, but we also share with them because they're also our shareholders, share with them an asset owner mentality. So the way we behave and manage the assets is a lot like us being the actual asset owner. And as I described previously, more and more for these pension funds, the end consumer, so the participants in the pension fund, becomes more important. So we offering on behalf of those pension fund clients lots of services to the participant in the fund. Traditionally, they only were to receive a letter each year in which they describe what their pension entitlements were. And now we have a lot of functionality being offered to them. Financial planning tools, communication about what is in the investment portfolio, benchmarking about life standard, the life standard they will have after retirement, help with life cycle events, like a new job, maybe divorce, losing your partner, things like that. So we offer also those kinds of tools and help to the end consumer. So in that way, we're also becoming, this is on behalf of our pension funds, becoming more and more consumer focused since I think 5 years now or so.
Well, the rest of the world has a lot to learn in terms of both the way the pension fund is structured, and also your point about thinking about the person through their life and the various life cycles. As you know, most pension funds worry about delivering a return first and foremost, and some of the other things, depending on obviously if it's defined benefit or defined contribution, tend to be someone else's job. So lots to learn from you all there. The other place there's a lot to learn, I think, from APG and the Dutch more broadly, is that you've been incorporating the effects of climate change into your investment process for some time. And I know that you're running climate scenarios that show that the effects of climate change are large and very comprehensive by 2040. So can you talk about how you're shifting your portfolio, or how you think you will need to shift your portfolio in response to the climate change thinking and the scenarios that you're looking at?
Mm-hmm. Yeah, of course, climate change is and very important, but an element of our sustainability policies that consists of inclusion, engagement, carbon footprint reduction targets, investments related to the Sustainable Development Goals, so-called SDIs, and lots of work we do in setting standards, green bond standards, GRESB standards, together with others, often for real estate and infrastructure. And now we also have a standard for SDI investments. And yes, you're right. As you said, we did a very thorough study into climate risks related to our investment portfolio, so a risk-based approach. And I think others are also starting to do that. I think it's important to assess the long-term value of companies and investments, taking into account the climate risk considerations. Of course, that has an effect on the value of the investments, the value of the companies, the worth of the fossil fuels that are still in the ground, the risk that sea levels will increase and how that will affect certain assets are, of course, the obvious examples. But there's a lot more to be told, and at the same time, there's also still it is, of course, uncertainty that you're dealing with. And of course, we're used to that as investors. You always deal with uncertainty, but this is a particular area where a lot is uncertain. But uncertainty should not say that you should not try to analyze and come up with first conclusions. And that's what we did and will continue to do. As you also mentioned, we're aiming towards a net zero portfolio. And we have carbon footprint reduction targets, as I mentioned, and that's increasing, eventually leading towards a net zero goal in the 2030, or maybe a little bit, but so that's what we are also aiming for related to climate change. But I think it's also the integration in the investment process, and this being an integral element of the analysis our portfolio managers do, that makes the difference. And that gives us also the toolkit to discuss things, to discuss the effect it will have on companies, discuss how it could affect the strategy of a company. Of course, we not usually, sometimes we are, but we're not usually in the position that we can completely set the strategy of a company, but through our very active engagement process, we try to influence the strategic course. And of course, this is an important topic for discussion. And of course, you need to first do some analysis before you can really say something about that. And well, climate risk is an important element. It's not the only element. Of course, we always try to balance it with other ESG factors, also on the social and ethical side of things, and of course with the traditional variables we always should look at, because all those will also an important role in realizing value from our investments.
So it's one of the things you said that is really important is that you're giving your portfolio managers the tools to talk to companies about this and really understand where the companies are coming from. I think one of the things that we've seen as this area has developed is that some organizations have regular portfolio managers, and then they have separate ESG tools or managers or leaders. And sometimes the companies feel like they're having two different sets of conversations. You've managed to put those together. So and you've done that, it sounds like for a while. How has that worked? And has that been an important part of your journey?
Yeah, I would call it the key success factor. So to from the beginning, aim for the integration of sustainability into portfolio management. We do have a specialized department, but we've always said it should be an integral element of portfolio managers. So the portfolio managers should adopt the ESG thinking. I think there was already from the beginning some good support and enthusiasm, but of course also a lot of objections, criticism. People didn't see the value at the beginning. So there was some people that were not supportive, but also from the start, some portfolio managers started to support it. And I think gradually it came to be an element where people were proud of. So yes, we see the value. We see the value for society, but we also, and that was a very important fact, we see that by using the other kind of research items, we also can make better investment decisions. So gradually, portfolio managers start to notice that taking into account those other things that they had not been looking at because they were only looking at the traditional financial variables, actually it sometimes made a difference between making a good investment or not. So they started to realize that there was a lot of hidden value in those variables. And I think that led to complete acceptance after some time. But I think if we had chosen initially to only have a ESG department and a portfolio management team, we would never have gone this far. There's always then a bit, maybe not always, but I think often a bit of an internal fight between, well, the sustainability department think we should do this, but wow, are we sure we want to do that? And here I think people are really collaborating very well. There are specialists, but also the portfolio managers care and find it important that they can include those variables. So yeah, I think it's a key factor for success.
It sounds like it's really worked in your case, and I think that's a lesson others could take from. Now, we're talking a little bit about climate, but of course it's not the only issue. As you mentioned, there are a number of issues about being a long-term investor, and as you said, the realization or the recognition that these issues affect long-term value is sort of the linchpin here. I also know you're using AI and other tools to try to give your managers ways to understand longer term trends. Can you tell us a little bit about some of the technology solutions that you're using to really think through these things with AI?
Yeah. Thank you for that question. First, maybe a little bit about long term, and then about long term investing, and then about AI. Sometimes within our company, people think long term is the same thing as sustainability, and I think it is a very nice pair. The two go hand in hand, but they're somewhat different things. You could aim, and we are also an investment manager that tries to realize value through long-term investing. And I have nothing against short-term investing or even flash trading when it stays within the boundaries of regulation, of course, but that's not our approach. Our approach is we try to identify value and realize that over the long term. That goes very, very well with sustainability, but it's a slightly different thing. So, like I said, a good pair, but I also try to remind my people of long-term investing it's not identical to ESG investing, and we should continue. Also, as a pension fund investor, you try to match your liabilities that have a long-term nature. And that also fits very well with long-term investing. And when I make the bridge with artificial intelligence, one could invest huge amount of dollars or euros or whichever currency in developing alternative intelligence solutions and buying data. But what we said, it should also fit with those two elements we already have, sustainability and long-term. So you would not find us trying to put drones above supermarkets and see how many parking spots are still available or not, or see the supplies at some kind of factory. That's not our thing. It could be useful information that we get through regular research, but that's not what we're trying to add ourselves. If we use artificial intelligence and alternative data, it should also be an element of our long-term. So yes, long-term demographic trends and new approaches of data analysis that can give you insight in those demographic trends, that could be something that fits us. The shorter term things, less so. We do think that every asset manager needs to become a digital manager. In that sense, I think we're also IT companies, but we try to fit it with our specific style of being a long-term investor. And we have an innovation lab environment in which we try to come up with new things. Sometimes it's just about process efficiency, cost saving. Sometimes the artificial intelligence helps us to come up with new trading algorithms and approaches to just reduce cost, not so much realizing but reducing costing and not disclosing what you're trying to sell or buy. That's an approach. Sometimes we make tools that can help our portfolio managers to get access to insights from research easier, faster, but we've also created data filterization methods and are buying and using new kinds of data sets or trying to discover undiscovered patterns, but always related to our long-term value realization goals added with sustainability. And I think that helps us in keeping the investments relatively low. Or it's still costly, but if we have, you may know the phrase that what happens if you add AI to a traditional asset manager. well, then it becomes a very expensive traditional asset manager, and that's what we want to avoid. So for us to make a difference, we should really focus on areas that fit with us, with our strategy of being a long-term investor. And then we want to make focused investments that help us and make us get a certain advantage compared with others.
I love the yes. What if you add AI to a traditional investor, you get a very expensive traditional investor. There are probably some people who've learned that. It also sounds like you're doing this in a you're putting a lot of resources and creativity and thinking, this innovation lab and so on. And you obviously run a very large plan. Could small plans do this? Is this something that is just inherently one of the advantages of scale? Or, you know, what would you say to your to the smaller plans in the world that maybe don't have quite the scale to be innovative, to drive those costs down, to think about that? Is there another way to do it besides really this bespoke way that you have done it?
Mm-hmm. Of course, there are benefits of scale, and so I think size matters, and it helps, particularly when when you talk about innovation experiments, trying out things, because we all know also from experience the success ratio tends to be relatively low. So you try out a lot, and a lot of things fail or show disappointing results, and then to start investing again and keep on trying, you need to have a certain financial ability and skill to manage that. I think there are two ways that smaller plans could benefit from this as well. I think for everyone, it's true that if you look at the process flows in your investment process, that there are certain cost benefits to looking at digitalization and data handling. Anyhow, even maybe not trying to discover hidden patterns, but simply trying to digitalize your information flows, and also smaller plans could do that. And another element, and I think there are some examples of it. I know one from the Dutch context, that you could partner. So you could see if you could partner with a bigger investor or a couple of smaller investors and see if there's a research ability that you could sponsor together.
So that's really helpful. So as you think about, you know, this plan and its timeframes, what are some of the investment areas that are most interesting to you over a 5 or 10 or year time frame, whatever it is? As you look forward, what are some of the more exciting areas that you are looking to understand better and invest in more?
Mm-hmm. Well, I think still we are not at the end of the trend of the increasing popularity of illiquid investments, real assets and other illiquid investments. So I think there's still a shift going on that will continue for some time. We've talked about investments related to sustainability. I also are far from reaching the end. We think a lot of value is to be harvested in China. So as a big new investment market, and also know that one needs to find the right way to enter China, do it careful, do it with a partner like we're doing, with a local Chinese partner. We enter the local market. So, but I think if you compare market cap and size of the economy, I know it's a bit trivial again, but I think there's still a lot of growth potential waiting, with ups and downs, of course, but I think that's an interesting investment. I think diminishing boundaries between traditional investment segments, we've seen it in alternative credits, the boundary between investment and banks. We have seen it in across the capital structure setups that large pension plans apply. And I also think there's still some interesting returns to be made from that. So I think that's well, I'm not that negative. Of course, one could say yes. We've had good years in investments, again, under difficult circumstances, and valuations in many asset classes, particularly bonds, of course, but also equities are rich. But I also think with good creative ability to enter new areas, there's still some good investment returns to be harvested. So tend to be really optimistic about investment returns in the next 5 or 10 years, without expecting very high or fantastic returns, but I think relatively good expectations. Yeah.
Yes, well, that's interesting and nice to hear as we hopefully get COVID under control and come out a little bit from the environment we've all been working in. There is an opportunity to see some real growth in the economies that obviously we haven't seen for some time. How do you think COVID has changed your organization and your investment approach in ways that will stay? I mean, hopefully some things will go away, but what do you think are the lasting impacts of what we've all been through in this last year?
Yeah, and there's some counterintuitive things. So we have noticed that our operational performance actually became better. So improved. Our operational efficiency improved, which of course is a surprise. So that, I think, led to the insight that we did have the traditional view that one could only be successful if you were to work 5 days from an office and then make long hours. And I think it shows that you do not necessarily need to be in an office all the time to be a successful asset manager. Look at the problem of operational due diligence in real asset investing, for instance, and that I realize it's not yet up to the standard that you would want to see. So it's still better to visit an object that you want to invest in yourself with a group of people. But actually, people have found ways to do a decent due diligence in different ways, using local partners, using digital techniques, looking at other sources. So I think we learned that, and then if you have back the tool of traveling, hopefully somewhere in the future, maybe you could, I'm not saying that you won't do that anymore, but you could pick between the different opportunities you have. So I think the mix that you have, that we have available for us has widened. And in that sense, I think there's also lots of benefits in the approach we can take. And of course, in the investment portfolio, you see areas that have suffered, areas where we needed to offer support. As long-term investors, we were also able to do it. And you see areas where, of course, companies and investments have benefited from it. And it shows that diversification is a good thing. And it shows I'm always happy during these days that as an investor, you're able to move with the trends. Maybe slow. Like I said, we believe in longer term trends, but the nice thing about our profession is that you can move your money around and able to move with the world and actually lead, also be proactive in influencing the change that the world sometimes needs. Wow. I'm also relatively, of course, very bad and negative sides. We know meeting with colleagues sometimes trying to share thoughts. That is something we miss as well. As a manager, as a CEO, you sometimes worry about, do I hear things? Do I miss things? And sometimes when I wake up at night, I say, oh, is there maybe something that I've missed? But I think overall, the experience is not as bad if if I had expected. If people said this is the situation you're going to be in for a year or longer, then before the COVID crisis, I had expected that we would be worse off. And if I compare how we managed and our sector managed, I'm sort of surprised and happy with how well we did.
Well, I think that combination of having the very long-term mindset, you know where you're going, what the long-term plan is, and that ability to adapt creatively to an unexpected event is that speaks well about the organization and the ability to both balance. Sometimes people think long-term means ignoring the short-term. It doesn't mean ignoring the short-term. It means having that long-term goal, and then of course responding to whatever happens in the short-term without losing sight of that long-term goal. And it sounds like you've been able to do that during this time. We would love to just wrap up with, one last thought from you in terms of your involvement in FCLT Global and this idea of pulling together people who try to rebalance capital markets to create and support a long-term sustainable economy. Can you just give us a thought about what some of the most important questions or best opportunities there are for change in the next in the coming year?
Yeah. Well, let me again emphasize, I'm very happy that I could join FCLT and the board. When we join a organization like that, we try to be influential, be active. And that's what I will try to do. I think what FCLT offers is the very interesting combination that you don't see that often, not only trying to bridge regions, the Americas, Europe, and Asia, but also not only investments, but asset owners, companies, so the different segments of the economy. And I think the secret lies hidden somewhere in global and cross-sectional approaches. I really believe in that. I think isolated approaches, I'm not a big believer in. I do realize that if you want to change the climate, you should probably start with doing things better yourself. But still, these are things that you need to tackle, I think, from a global perspective. And I think trying to make changes towards the way we invest, and we try to realize value in a sustainable way. I think the FCLT is a great organization to make a crucial difference there. And I'd like to help there and have an active role.
Well, that's terrific. We really appreciate your time today, and so appreciate everything that you're doing for and with FCLT Global. So thank you, Ronald.
Thanks for listening to today's episode of Going Long with FCLT Global. Be sure to hit subscribe to get new episodes every other Monday. To learn more, visit our website at fcltglobal.org.